Hi guys, it's Thomas here from COTBase.com. Welcome to our weekly COT review. Today we're going to be analyzing the 49th Commitments of Traders report of 2023, and as we always do, we shall start off by looking at the largest changes in commercials positions. But before we jump to the review, just a brief reminder for those who are new to COT analysis here at COTBase.com, you'll find a lot of educational material. Not only do we have these in written format, but we do have some very good videos as well. I just want to stop here for 1 second because it will be important for this review. The commercial capitulation, which I will show you an example. It's very rare, but I do think that we are witnessing one at the moment. Okay, of course we have a lot of materials in video format as well. Obviously how to use our indicators, some tutorial videos on classic COT analysis, and we have a bunch of videos and great playlists, by the way, on our YouTube channel. So back to the review, and starting off with the Brazilian real. We are of course organizing these markets based on their changes. So we are analyzing in the first step commercial net position changes. So we're of course there's different data sets, but we are looking at the most commonly used net positions. We are analyzing classic, or as CFTC calls it, legacy COT report, the combined futures and options data. And based on that, we have the Brazilian real on top of our list. So let's open it. There's a 47% change, huge change. Easily the largest change. I'd say there was a huge change back over here in January of this year, but this change may actually be a bit larger than that, and it is a bearish change signal suggesting weakness coming in the next couple of days. Not necessarily the best signal. I really enjoy COT change signals like the one, maybe this one. But there was already a rise at the time of the report being issued. So anyways, it is a bearish change signal suggesting weakness in the Brazilian real. And that's easily seen on the 1-year chart. But if we move to the 5 years, you can see that with this sudden change in traders' position, we actually reached a bearish COT Extreme situation. Something that we haven't seen since roughly April of 2022. At the time, we had that top in the market. So we are lower, but it is a bearish extreme suggesting further weakness in this market. So not only do we have a change signal pointing downwards, but the extreme analysis is also showing a more bearish picture. The next market is going to be sugar. Here we have a 47% change in commercials net positions. So the same size in percentage terms, and it does put this change, I'd say top 3 on this chart. You can see the last time we had a more significant bullish COT change signal was here. The report, of course, from June 26, it was issued on June 29. It was a very successful bullish COT change signal. We have something similar here. And what I like about it is that it's coming after a decline in the market. So it is signaling we may see a rise from here. That being said, it's always important to see the longer term picture, which, as you can see in the past couple of months, was definitely more bearish. So we should not be surprised that the market has actually gone down. And the fact that we have this larger than average change signal shouldn't mean too much in the longer term picture. So we are definitely not at any bullish extremes. However, the bearish extreme may actually started to work, and we are witnessing a start of a potential trend change in the sugar market. That's something you should keep in mind. Crude oil is our next market. Huge changes this week, 45% change in this market. It is once again a bearish change signal. But it is coming after a declining market. So I might not consider this to be that useful of a signal. Nevertheless, it is larger than average, and it does signal what traders are doing. So I wouldn't act upon that, at least definitely not in the direction of the signal itself. A 5-year chart shows us that there's not much to talk about. So there's no clear COT Extreme conclusion over here. So I'd say moving on to the large speculator COT Extreme analysis may actually be a good idea. But before I do that, I'm just going to jump over for a second, as I always do, just to highlight the effectiveness of our indicators. This is the iCOT Intraday Indicator on the S&P, a market that a lot of you are trading. And with proper settings, I just wanted to show you how well the indicator can work. Again, this is a tool that we developed after many years of research, and it is mimicking the ways of COT analysis. So iCOT scores, you can see that these charts are very similar in nature to classic COT charts. Obviously, the data is not provided by CFTC. However, they do work in a similar manner. So if there's an extreme, you get a signal. And it does really well. Signal changes in the trend. So a popular market, and I would say a popular indicator for you. Back to the review and continuing our analysis with Orange Juice, which is going to be the market where I wanted to show you this commercial capitulation. This is the 5-year chart. So we have a 99 report extreme. Okay, and it is actually more of a bullish extreme, even though in the long-term picture we are, of course, far away from those levels. But it is showing you that we had this bearish COT extreme in the market for quite some time. Look at that one from January of this year. Yet the market kept rising, and that's what we call a commercial capitulation, which means that basically commercials who are hedging in the market are getting margin calls and have to close their hedge positions, which further fuels the rally. And that's what's happening in Orange Juice. So who knows where the end is, but definitely it just shows you that Orange Juice traders here were unable to make any significant effect on the market over here. So the Brazilian Real we talked about, we're going to jump over that. We're going to finish off our review with live cattle. Here we have a 71 report extreme in large speculators. It is a bullish COT extreme. You can see that there's room for the extreme to grow, which I think can easily happen. The more time has passed since an extreme, I would say there's a high chance that we could reach those extremes. So, even though we have seen a pullback in the market, I might not, I don't think that it's time for being excited about going long at these levels. It's hard to use COT analysis to pinpoint exact locations of trend reversals, changes. It just simply shows that stress levels is growing in one or the other direction. So right now we can say that it is a bullish extreme that can easily grow to even greater levels. Now, don't worry, here at COTBase.com, you have a lot of tools at your disposal to dig into the report. So obviously these reviews are very brief and just gives you a glimpse on what's happening. If you'd like, you can actually add other important tools like the COT index, COT move index, long-term trend indicator, volume and open interest analysis. We score those as well. If you'd like to focus your attention on a specific market, we talked about the Brazilian Real, there you go. You can actually dig into the data itself over here and check whatever you're interested in. We do offer our own indicators, COT Base Pro, everything you got in the website. The premium service is available on NinjaTrader. iCOT Intraday Indicator. I showed you the S&P. This is something that's available not only on NinjaTrader, but TradingView as well. And it, I think, very well supplements the longer term analysis that we do in classic COT analysis. And it can really help you enter and exit the market. If you have any questions, feel free to reach out to info@cotbase.com or just comment underneath the video. We are here to help and assist you. Thank you very much for your attention. I hope to see you in my next COT review. Take care. Goodbye.